Hey guys, what's up? Welcome to another episode with me, Shashank Udupa. And in today's video, we are going to look at what are mutual funds buying. And in today's video, we're going to look at Motilal Oswal because Motilal Oswal has been very aggressive with their past buying experience in their mid-cap mutual fund. So today, I'm going to quickly look at what is happening in their mid-cap mutual fund. So I hope you guys enjoy this and please definitely stay tuned. Yeah. Okay, let's go. Now, as you can see my screen, let us go through the stock picks one by one that Motilal Oswal has done. Now, we also have PPFS and Quant as well. So we will talk about that slightly later in another video because I don't want to cramp everything. So let's go one by one in this, right? So the first thing that they have done, I think they had Coforge already. Now, Coforge, I think they had a split. So there's no changes in their allocation. But if you look at Coforge from a chart perspective on a daily angle, you see that if you see recently that the whole IT sector and the IT result was not looking very attractive. See, this is the Coforge chart. So let me just zoom in a little bit so that you guys can see it. Yeah. So this is the Coforge chart. And if you remember, the whole IT index is not doing well because we saw the results coming out from HCL. We saw the results coming out from TCS. So not very encouraging. But if you look at Coforge being the fastest growing IT company right now, even though everyone is doing bad, Coforge and Persistent are the only two companies that were doing well. But if you look at Persistent, they had a problem in one of their customers in US, which was a very famous customer, and that became a problem for them as well. So if you look at Coforge, they are currently very close to their all-time high, which was 2,000 rupees, and they actually hit the all-time high, and then they're still coming down, but they have not gone into a negative slope yet. Now it all depends on what the result comes for Coforge, and if the result comes good, then it should definitely break out the all-time high and go ahead. So they still hold Coforge, and Coforge has been a very good momentum company as well. And the next company that they have increased stake again is Dixon Industries. Now, as you guys know, Dixon, very controversial, mainly because the PE of this company is extremely high. It is a very high PE company, but fundamentally it is still very strong. Now, this is that type of a company where, people love it because fundamentally it's strong. They are into mobile phone manufacturing, which is one of their biggest revenue drivers. They're also very diversified. They've recently done a joint venture with a Chinese company. So Dixon has been a very powerful player in the entire market. The only problem with Dixon is that their P ratio was significantly high, which obviously creates a problem for a lot of people because people don't want high P companies. People want low P companies, even though fundamentally they are very good, right? And that becomes a problem with Dixon. So if I show you the P of Dixon, it is currently trading at 88 P. And if you had to look at the forward P, it would be with respect to their growth rate. If you add their growth rate, it would be somewhere around 70-ish, right? 75 or even 80, honestly, looking at the growth rate that they're currently going with right now. So it is definitely overvalued, but Motilal Midcap has basically taken an aggressive stance on this, and they have increased their stake in this company at almost 20 lakh shares right now from 8 lakh 35 in May. Now, another company that they've again increased stake is Trent. Now, Trent, which is very weird, and I'll tell you why it's weird, because if you recently saw Trent's a business update that they did, they very clearly mentioned that they are witnessing a slowdown. And you can see that the stock has definitely taken a beating because of that. Even though the results are not out, they have definitely taken a beating. And if you look at Trent, they're continuously having problems. So it fell down because of the slowdown. It tried to recover, again fell down, again tried to recover, again fell down. So clearly what is happening here, similar in the case of all high PE companies, whenever high PE companies ka slowdown starts happening, they start correcting like this. So if you look at Trent, if I come here and show you the P ratio of Trent, it is currently trading at a P ratio of 124. Now, usually high PE companies are justified if the growth is justified in the same way. Because if you're saying Trent is going to grow by 100% year on year, then this P is actually 124 today, but people only look at forward in the market. So it would be around 65, 66 in the market. But now what is happening is the P is also high, correct? Mutual funds are buying Trent left, right, center, but the growth is not coming in at the same case. Why is the growth not coming in? It is justifiably so only because the base has become so strong. So if you look at Trent, they have grown quite aggressively from 2,700 crores in 2021. They've grown to 17,000 crores in 2025. That means it has gone up almost 7 to 8 times in 5 years, which is obviously definitely a huge landmark for a Tata Group company. Now what is happening? The base has become very big. And with the base becoming bigger, you can see how the revenue, which is actually going to be quarter on quarter, it is not growing as fast as they want to, and not growing at 40-50%, but growing at slightly lower pace. So that is what the problem is going on with Trent, right? Then they have added another company called Supreme Industries, flat QOQ sales growth. So by the way, this is the Excel sheet that we make for the community members, which I will be sharing to all the community members as well, because we have put our comments here also about what is happening with each and every company. So they have taken more aggressive stance on Supreme Industries, right? And if you look at the chart of Supreme Industries, let me put that on as well. It is a very negative chart. As of now, there is no positivity in this chart. It was in a negative angle, and now it is trying to take a base over here. So it is like this, and it was in a falling momentum as well, like this, right? So it has taken a small base here, and only about this would be looking good. But again, there is no news as of now on this company, why it should go up. But let's see, they have taken a very aggressive stance on this, and they've increased their position by almost 130%. So that is something that is happening. Then they've taken small other companies. They've taken Keynes. Again, very weird, because again, Keynes is similar to your Dixon. It is in the EMS space, slightly different product mix, right? Like how PGL is there, Amber is there. So they've taken a investment in Keynes as well. Again, it is overvalued, again in the EMS space. So either something very big is going to happen in this industry, because smart money is moving in this industry. So that is how we start tracking it. KEI, they were constantly adding KEI, and we recently saw Polycab came out with a very good result. That means KEI's result should also come out positive, because the whole space is again looking attractive, right? So again, this becomes a positive add. Kalyan, they pretty much have the same amount of stake. Now let's look at what have they reduced, and this is very important for us to learn. Now, if you look at what they have reduced a significant chunk of 197, which is Paytm, because Paytm also did a very nice rally. If you look at Paytm stock, they have been doing really well. As you can see this, look at this rally. Paytm's rally was just wonderful from this whole month, from the whole thing that they did. So it has been a very good rally, and right now it is back to its 1000 resistance zone. But still, the rally looks very interesting, right? So Paytm is something that they've reduced, not too much. If you see, they've reduced 20% of this. They still have a huge amount of chunk left with Paytm, because they were constantly adding Paytm. They've reduced Balkrishna Industries. Now here they have reduced fully the Indian hotel company. Now this is very, very, very interesting, right? Because if I go show you this, which is IHCL, which is your Taj Hotels, right? So look at the funny part here. Okay, and I'll show you something funny here. Now, IHCL is a company that recently broke 200-day moving average. So if I go here and put moving average, simple moving average, and I change it to 200-day, you'll see the difference, right? So it recently broke 200-day moving average, which is considered a very negative sign, because if you look at the past for IHCL, it is a trender on 200-day moving average. Every time it takes the support at 200-day moving average, and multiple times in the past over years. And this is the first time where it has looked very choppy, and it has broken 200-day moving average. Now, why I said this is very weird, because recently IHCL came out with the result, and the result was not bad. The result was quite good. And a lot of people are getting shocked that even though the result was so good, why is the stock price not going up, and it is flattish? And if you look at all the other companies that have come out with results, which are in the same space, they have started going up really well. So IHCL mein again, what is happening was this the P that was an issue? So let me show you the result over here, right? As you can see here, the P is 60, but we don't look at only P here. We look at EV/EBITDA also. We'll look at that as well. So here you see that the sales growth was definitely there, June to June, because travel industry is a seasonal play. So June to June, the growth was there, EPS growth is there, everything is there in this company, nothing wrong with this company. And if you look at the EV/EBITDA, we can check 34.5, right? And ITC Hotels also came out with a very good result recently. If you look at ITC Hotels, they are also at EV/EBITDA of 38, even though they are also the leaders. But ITC Hotels came out with a good result, the stock went up. In fact, if you look at ITC Hotels, their stock price is only in an up. Look at this. Massive upward journey, saying Tata bye-bye, see you, we are going up, right? But I don't know what is wrong with IHCL. Some news is there or something, because they have been growing. The growth is not bad at all. It is a very, very significant 30% quarter on quarter growth. Yearly also they are growing. So this premium is not getting factored in into this company. And even Motilal Oswal has taken a full exit from this company as well, right? So all this is very interesting for us to learn and us to understand. They've taken a full exit in CG Power. The chart is not looking good. Zomato, fine. It's so weird because they keep entering Zomato and keep exiting Zomato. They're playing almost like a swing trade with Zomato. So they've exited Zomato as well recently. And they recently exited and entered Zomato also. So these are some very interesting things to look at. But again, my job is to come here and show you where the smart money is investing, so that we understand where we can also look at when we start investing as well. Yes, Some of the picks are very aggressive from what Motilal has done, but that has been their style over a long period of time, right? And if you want to know more and want to invest more, you can definitely check out the Grow app. And as you know, we are a part of the Grow network as well, so that would help you guys a lot. Okay, awesome guys. This is me, Shashank Udupa, signing off. Take care. See you guys. Bye. And in the next mutual fund video, I will show you both Quant and Parag Parikh. What have they invested in this, so that I can go deeper and make you understand more about each and every company. Thank you guys. Take care. Bye bye.